As the argy-bargy continues about the Murray-Darling Basin, it's worth noting that yesterday, October 16th, was International Food Day. And as the experts and the bureaucrats and the politicians try and manage Australia's food bowl, let's check some facts and figures about world food demand and population. The world population is now about 6.8 billion. By the year 2050, a mere 40 years from now, that will grow to 9.1 billion. That is, there will be a third more mouths to feed. And the demand for food will grow as a result of both population growth and rising incomes. But by 2050, around 70% of the world's population will live in cities or urban areas, as opposed to less than 50% at present. Demand for cereals is projected to reach 3 billion tonnes a year by 2050. Our current production is just over 2 billion tonnes. Meat production is currently around 270 million tonnes. That will need to be 470 million tonnes by 2050. Now, many questions emerge from looking at those startling and somewhat scary figures. But for me, two questions stand out. Where do we find the land to grow this food? And where do we get the water? I'll leave you to ponder that, and you might also ponder some prices for last week. I think frenetic might be an appropriate word to describe some of the trading. It started with a forecast of a drop in American corn production and a cut in world wheat stocks. Wheat finished the week up 40 cents. Corn lifted nearly 70 cents, and soybeans rocketed more than $1 a bushel on the back of insatiable demand from China. And back home markets were well supported on the back of those limit-up performances in America. Wheat out of Newcastle lifted after several weeks heading south. Geelong canola was up, and sorghum also went up $22. And the ASX saw plenty of positive action. WA wheat for January lifted $11. Milling wheat in New South Wales for the same month posted an increase of $15 a tonne. Two factors are weighing heavily on the cattle market. The obvious one is the dollar, making it very tough for exporters. And secondly, numbers were up everywhere last week except Queensland and Victoria, where more rain kept stock movements down. All categories fell. Cows held up pretty well. Throughput was up by 43% in New South Wales, and the offloading due to the drought continued in Western Australia. And all that action left the Eastern Young Cattle Indicator down by 8 cents to close at $3.64 a kilo. Now, latest news on the live export trade is not good. Insiders tell me there's no indication of any resolution regarding either weights or numbers. And I'm also told that cattle going out now are part of next year's quota. But there is some good news. Demand from the Middle East is jumping in recent weeks. Cattle have gone to Libya and Egypt. There's a new feedlot in Egypt. And just recently, a shipment of slaughter cattle went out of Fremantle to Turkey. Prices ex-Darwin are steady. A boatload of heavier cattle went to Malaysia at about $1.40, and a similar boatload of big uns went to the Philippines. Now, mutton prices have been steady and remain close to 20% up on this time last year, while lamb prices eased a fraction. Now, cotton is white hot. Contracts have been closing limit up, and the frenzy of activity suggests there's more upside to come. It's built around a big fall in China's production because of the floods there, and China actually issued a statement warning against speculation. The market took absolutely no notice whatsoever. That price for cotton equates to around $590 a bale, and nobody's betting against a price close to or exceeding the 1995 all-time high. That price, as best I can find out, was just 1 cent more at $1.18. Still in New York, and sugar went up and down before closing close to 28 cents a pound. And finally to wool, where the very strong market continued. There was keen demand from China, India and Europe, and pass-in rates were low. The Eastern Market Indicator lifted 1.6% to close at 907 cents a kilo. And that's the Landline check on prices.